أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقه قولي اللهم أخرجنا من ظلمات الجهل والوهم إلى أنوار المعرفة والعلم ومن وهول الشهوات إلى جناتك الفردوس. أما بعد, today we shall be talking about Sukuk and mutual fund. This is our first course. This is our first lesson in this course, Sukuk and mutual funds. So, in our first lesson today, we have some goals and we have some objectives that we need to cover. So, number one is by the end of this lesson, the student should be able to define Sukuk, explain the importance of Sukuk, identify the features of Sukuk, discuss the characteristics of Sukuk, outline the principles and guidelines governing Sukuk issuance and operation, differentiate between various types of Sukuk based on their structure and purpose. Then lastly, describe the issuance process of Sukuk, including key steps and stakeholders involved. So these are the 7 objectives that you need to achieve by the end of this lesson. So number one, let us start with the first objective, which is to define what Sukuk is. What is the definition of Sukuk in Islamic finance? Sukuk are Islamic financial certificates that represent a share in the ownership of an asset, service, or investment benefit. They are often referred to as Islamic bonds. Unlike conventional bonds, Sukuk do not pay interest, as earning interest is prohibited in Islam. And interest in Islam is known as riba. For example, imagine a community wanting to build a hospital. Instead of taking a loan from a bank, which will charge interest, they issue Sukuk, where investors buy certificates that provide them with a share in the hospital's profit. So this is the definition of Sukuk in a nutshell. Now, what are the importance of Sukuk? Number one, compliance with Sharia. Sukuk provides Muslims with investment opportunities that comply with Islamic Sharia or Islamic law. So it's not like the conventional bonds which have interest. Number two, diversification. It helps in diversifying financial products available in the market. Lastly, infrastructure development. Sukuk can be used to fund infrastructure projects, creating jobs and boosting the economy. So, for example, a country may issue Sukuk to finance the constructions of a new highway, effectively using community investment to enhance public infrastructure. Now, let us go into detail now of the importance of Sukuk. We said there are 3, but now we shall go into details to try and explain the importance of Sukuk. So number one, the importance of Sukuk is compliance with Sharia. So under this, we have ethical investment, access to capital, and trust and stability. So ethical investment, Sukuk provide Muslims an opportunity to invest in financial products that align with Islamic principles. And that is the meaning of ethical. Ethical is related to akhlaq. And this ensures that their investment comply with Sharia law. And this is crucial for individuals who want their financial activities to be ethical and in line with their religious beliefs. Number two, access to capital. Through Sukuk, Islamic financial institution can raise capital without violating the prohibition of riba, interest. This makes it possible to finance various projects while adhering to religious obligation. So Sukuk can be a platform where Muslims or Islamic institutions or governments can easily get funds without necessarily going to banks to do what? To ask for loans, which they'll have to pay interest in return. Number two, And number three, trust and stability. The Sharia compliance creates a sense of trust and stability among investors, as they can be assured that their funds are not being used for haram, forbidden activities. Consequently, this can lead to a more stable financial ecosystem within Islamic finance. And you're being given an example. An Islamic bank issues Sukuk to finance a new fruit processing facility. The structure of the Sukuk complies with Sharia because the income generated is derived from legitimate business activities, such as the sales of processed fruits. This compliance ensures that investors feel secure in their investment. So, this is the first importance of what? This is the first importance of the Sukuk, basically. Okay, number two. Number two is diversification. And when you're talking about diversification, it is based on the concept of not keeping all eggs in one basket. So if you're a businessman or if you're doing business, you'll be familiar with this concept. That is, when you are investing, at least try to ensure that you are investing in different fields. So, number one, what is the importance of the Sukuk in issues related to diversification? So, number one, broader investment options. Sukuk offers a variety of instruments that cater to different environment preferences. This is the keyword, different investment preferences, allowing Islamic investors to diversify their portfolio beyond traditional equities or bonds, which may not align with their beliefs. So in Islamic Sukuk, you are allowed to invest in different fields. It's not like the conventional bonds. That is, you only invest in one area. No. Islamic Sukuk is open so long as so long as what you are going to invest on is as per the Islamic rules and values. Number two, risk mitigation. Diversification helps in spreading risk among various asset classes and sectors, reducing the overall volatility in an investor's portfolio. So investors can choose from different types of sukuk. We have ijara, mudaraba, musharaka to match their risk appetite and invest goal. So there is some risk mitigation. That is, we have different types of sukuk, as we shall see later. So in Islamic finance, you are and all these sukuk, for each and every sukuk, there is a different level of risk. Some sukuk, they have high risk, some sukuk, they have moderate risk, and some sukuk, they have low risk. So you as an investor, you're given the option to, based on your risk appetite. And of course, remember in finance, the higher the risk, the higher the return. The lower the risk, the lower the return. Keeping that in mind. Then lastly, enhanced market efficiency. The introduction of sukuk into the financial market leads to a more efficient allocation of capital as they attract a wider range of investors, both Muslim and non-Muslim, interested in ethical investment. So there is what is known as enhanced market efficiency. And enhanced market efficiency can only occur when there is efficient allocation of money or efficient allocation of resources. And this can only be achieved through sukuk. Then lastly, sukuk, they also help in what? Infrastructure development. How? They finance large projects. For example, a government wants to build a hospital, a government wants to build a road, so they can give them sukuk, and they can get some fund. So people will buy shares from those sukuk. And if it is a government project and the project gets profit, they will be paid from that project. Number two, there is job creation and economic growth. If it is financing big projects, from this big project, people are going to get job. And if they get job, it means they are employed. And if they are employed, it is basically meaning that their purchasing power is high and money is circulating. Then, utilizing community investment. Sukuk allows local investors to directly participate in the development of their communities. When a country issues Sukuk for public projects, residents can feel a sense of ownership and engagement in their local economy. So this is basically a summary of the importance of Sukuk. Number one, it complies with Sharia. Number two, there is the element of diversification. Then number three, there is infrastructure development. Now, on to the next part of our lecture. What are the features of Sukuk? When you're talking about the features of Sukuk, you are basically talking about Mahi al-Khatwa'id as-Sukuk. So there are three main features of Sukuk. Number one, asset backing. Number two, profit distribution. Number three, tradability. So let us look in detail into these features. So number one is asset backing. What is the meaning of asset backing? What is the definition of this? Asset backing means that Sukuk must be tied to a tangible asset or real economic activities. This feature is a core distinguishing characteristic of Sukuk compared to conventional bonds, which are often purely debt instruments without ties directly to physical assets. So when you are talking about the Islamic Sukuk, for example, a government can do what? A government can give Sukuk. Maybe a government wants fund some money to fund a project. So what they do, they give Sukuk. When the people will buy the Sukuk, and they will have ownership. Ownership in what? Ownership in the project that the government is going to invest in. If the government is investing in the hospital, they'll have a share in that hospital. If a government is investing in roads, they'll have a share in it, meaning that the profits, they will be paid from the profits that come from that project. But the conventional Sukuk is not, the conventional bond is not like that. The government, for example, the conventional bond means that the government will just give out the bonds, then it will get the finance, the money, then it will go to invest. We even don't know where the government is going to invest the money. Now, what is the importance of this asset backing? There is risk mitigation. The asset backing reduces default risk because investors have recourse to physical asset in the event of financial difficulty. So, for example, if the government gives Sukuk, and of course, we are going to give the government the money to go and invest. It will invest in a project. So in case the government fails to pay us our money, then what is going to happen? There is a project. So so if the government defaults, we can go to the project, the hospital project, we can sell it and we can get back our money. Value assurance. The underlying asset provides intrinsic value to the Sukuk, ensuring that the investment is connected to real economic sources of income. So the Sukuk is attached to the hospital, and the hospital is something that has value. Then Sharia compliance. Islamic finance principle requires that transaction must be linked to tangible economic activities, avoiding speculation and excessive uncertainty. Remember, in our last course, you are talking about the principle of Islamic finance. And one of the principles of Islamic finance is al-gharar, uncertainty. So Islamic Sukuk does not have the element of uncertainty, that everything needs to be clear at the beginning. Number two, another feature of Sukuk is profit distribution. What is the definition of this? Profit distribution in Sukuk refers to the method through which returns are allocated to Sukuk owners. Like if you're having a Sukuk, how are you going to get your return? So instead of receiving fixed interest payment, like what happened in the conventional bond. Conventional bond, the government will give you the bond, but they'll be paying you on a fixed interest. If it is 3% annually, it will only be 3% annually. But Islamic Sukuk is different. So investors earn profit that are derived from the actual performance of the underlying asset or business venture. So profits We get our profit from what? From the hospital that the government built, or from the road, or from any project. If the government gets a lot of profit, we will also get profit. If the profit is not that much, we'll also not get a lot. So that is how we get our profit from Sukuk, not from the fixed interest. So the importance of this is that it is performance-based. These features aligns investors' interest with the performance of the asset, promoting a shared risk approach. If the project of the government gets profit, we get profit. If there is loss, we don't get anything. It is also Sharia compliance. There is no fixed return. Sukuk adheres to Islamic principles. Then potential for higher return. Investors can potentially earn higher returns if the underlying asset or project performs well. If the government invests in a hospital and the hospital is doing okay, there is a chance that we are going to get a lot of profit. Then lastly, another feature of Sukuk is the tradability. What do we mean by tradability? Tradability refers to the ability of Sukuk to be bought and sold in secondary markets after their initial issuance. Maybe the government can give you the Sukuk, but can you go and sell it, for example, in the money market or the financial market? So this feature provides liquidity to investors, enabling them to convert their investment into cash relatively easily. So if I'm having a Sukuk, I can easily sell this Sukuk to somebody else if I need money. I can sell this Sukuk to somebody and I can get money. This is the meaning of liquidity. Tradability enhances the liquidity profile of Sukuk, allowing investors to exit their investment when needed without incurring substantial losses. So if I think that I don't need this Sukuk, I can look for a buyer in the money market or the financial market and I can sell it. Market efficiency. The ability to trade Sukuk contributes to a more efficient pricing mechanism where market forces can appropriately value Sukuk based on their perceived risk and performance. So remember, the Sukuk is just like a commodity. The market forces are the ones that are going to determine the price of the Sukuk. If the price of the Sukuk, if there is a high demand for the Sukuk, of course, the prices will be high. If there is low demand for Sukuk, then the prices of the Sukuk will be low. It will not be attractive. Then investor confidence. The knowledge that an investment in Sukuk can be liquidated enhances investor confidence and encourages participation in the market. The fact that we can easily do what? Trade and sell our Sukuk to get money can give investors what? Can give investors investment. It can give investors confidence to do what? To invest in Sukuks. So these are the three features of what? Of Sukuk. So this is the summary. Number one, the asset backing element of the Sukuk. Number two, profit distribution. Then number three, tradability. Now on to the next part. What are the characteristics of Sukuk? So Sukuk has three characteristics. Number one, risk sharing. Number two, tenor. Tenor means time. Tenor is from the word time. Then structured finance. So let us look into details. What is the meaning of these three elements? Number one, what is risk sharing in Sukuk? Risk sharing is a fundamental characteristic of Sukuk, which involves what? Distributing the risk and rewards associated with an underlying asset or project among all investors. So it means, for example, in the Sukuk, this is what I was telling you. If the government gives the Sukuk to, of course, the local people, and the government will go to invest. So the government, of course, when it invests in a project, the project can be good. That means that it is profitable. Sometimes, of course, projects are not doing okay. They can get lost. So there is risk sharing. Okay, fil farh wal huzn, we are together. If the project is doing okay, you'll get good profit. If it's not doing okay, labas. You'll not get anything. Unlike the conventional bonds or in the conventional finance system where they transfer all the risk to either of the parties. So this is the key element of what. So this risk sharing, it aligns the interests. So risk sharing aligns the interests of investors with those of the issuers and the underlying project. All parties benefit or face losses, full stop. Promote ethical investing. These characteristics encourage ethical investment practices as it discourages excessive speculation and promotes investment in tangible assets. Then lastly, encourages due diligence. Since investors share in the risk, they are incentivized to conduct thorough due diligence and actively engage in the management of the project. So due diligence means if I am a party in the investment with the government, Mathalan, I have to do what? I have to ensure that the government is going to invest in a project that is visible, a project that has value. So I don't just have to sleep and just say that I have an investment in something, yet I don't know how the investment is doing. Then the tenure, predetermined time. So tenure means what? Tenure means what? Predetermined time. So tenure refers to the predetermined maturity date of the sukuk, indicating the length of time until the principal amount must be returned to the investors. The tenure helps investors understand the time horizon of the investment. So what they're basically telling us here, if the government gives you sukuk, of course you will give your money. Maybe you can give the government $5,000, but there should be an agreement. After how long will the government give you back your money? It has to be very clear. So that is the maturity date of the sukuk. If it is after 1 year, then after 1 year, you have to be given back your money. And if there are some profits involved, you'll also be given. So what is the importance of this? Investment planning. So knowing the time, the tenure, allows investors to plan their investment and cash flow needs effectively, aligning with their financial goals and risk tolerance. So if I know the sukuk is for 5 years, 4 months, or 2 weeks, I can align it to my goals. Number two, predictability. A fixed tenure provides a level of predictability regarding when the principal investment will be returned, which is essential for financial planning and investment strategy. So sometimes some sukuk, they have a fixed tenure, a fixed period of time. And from this fixed period of time, you can easily predict the amount that you are going to get in that fixed time. Then lastly, there is the market appeal. The availability of sukuk with varying tenors caters to a broad range of investors. Remember, if you go to the market, the government, some big companies, they're giving sukuks, different types of sukuk. Some of them will give sukuk for 2 years, some of them will give for 1 year, some of them will give for 6 months, 3 months. So market appeal, everyone will go to the market and basically trade in the sukuk they like. If I like 3 years, I can trade in that. If it's for 6 months, I can. So there is the element of options. Then lastly, there is the structured finance. What is this? So structured finance refers to the complexity and sophistication involved in the issuance of sukuk, where various financial instruments and arrangements are used to meet the specific needs of investors and issuers. So sukuk can utilize different structure. So there are different types of sukuk. We have, as we shall see later, we have ijara, we have murabaha, musharaka, depending on the underlying asset and project. So there are different types of structure. And for each and every type of structure, there is some element of complexity that is attached to. You know? Now, what is the importance of this structure? Number one, customization. Structured finance allows sukuk to be tailored to the specific needs of both investors and issuers, enhancing the appeal. So when you have the structure, I can easily choose the structure that best satisfy my needs. Number two, enhance risk management. By using different structures, issuers can diversify risk and ensure better management of project cash flow. They can diversify, they can give different types of sukuk. So this can guarantee them flow of income in the future. But if you only provide only type of sukuk, like ijara only, what if it fails? So it is better to diversify. Then lastly, broader market access. The range of structured financial instrument involved makes sukuk attractive to a wider pool of investors, both within Islamic and conventional markets. So we have a broader market access for the sukuk and the different structures. And even nowadays, even people who are not Muslims, they are actually investing in what? In sukuk. So this is the summary of the characteristics of sukuk. Number one, risk sharing. We have tenure. Then lastly, there is the element of structured finance. Okay, on to the next part. What are some of the principles and guidelines of sukuk? So already we have seen this. This is just a repetition. So Sharia compliance. Number two, asset-backed financing. Number three, transparency. So these are the guiding. When you're talking about principle, we are basically talking about al-mabadi. These are the principles that are guiding sukuk. So number one is Sharia. Your sukuk has to be Sharia compliant. This means that all financial transactions must adhere to, the key word is lazim, wajib, must adhere to Islamic law, Sharia, which prohibits practices like riba. So we should not have the element of what? Riba or interest in our what? In our sukuk. Gharar should not be there. And investing in a haram project. For example, you cannot offer people sukuk, then you go and invest in khamr or maisir or pork industry. No, it cannot happen. So this Sharia compliance ensures that there is ethical investing. We are investing on only things that are permissible. Investor trust. Investors, they normally do what? They normally have confidence, especially when they know that you are investing in something that is halal. Then there is the market integrity. It promotes integrity and fairness in financial transaction within the Islamic financial sector. So there is the element of fairness, al-adala, and equity. Number two, the asset backing. I've already explained this. The asset backing financing means that sukuk must be backed by a tangible, real asset or services that provide values to investors, the people who have bought the sukuk. This backing can include real estate, so it can include real estate, equipment, or infrastructure projects, ensuring that investors have recourse to physical assets. So sukuk has to be attached to something that is tangible or something that has value. Then number three is transparency. Transparency means a shafafiyah. So transparency in the context of sukuk entails providing clear, everything should be wadih, and accessible information regarding the sukuk structure, the rights and responsibility of the sukuk holders, returns, risk, and other relevant aspects of the investment. So you need to give the investors all this information. Their rights, the structure, the returns, the risk, and anything that is relevant. Why is this important? So that they can make an informed decision. Number two, there can be some element of accountability. Then lastly, there can be that element of what? Of confidence. So these are the basic principles of what? These are the basic principles of sukuk, the Sharia compliance, the asset-backed financing, and transparency. Okay, on to the next part, which is very important. Remember, we've been talking about the structure. Structure means we have different types of sukuk. So as an investor, you can decide to go for the sukuk al-ijara. You can decide to go for the sukuk al-mudaraba. You can decide to go for Sukuk al-Musharaka. And lastly, you can decide to go for the Sukuk Assalam. So what is the difference between all these Sukuk? Let us start with the first one, Sukuk al-Ijara. What is the meaning of Sukuk al-Ijara? Sukuk al-Ijara are Islamic financial instruments based on leasing contract. In this structure, the issuer of the Sukuk leases an asset. And the asset can be real estate or equipment. I have a house. It's just like I'm going to rent my house. Or I have my car, I'm going to rent my car to the Sukuk holders for a specific period in exchange for rental payment. So I can give my Sukuk, or I can give the house, the car, okay, to somebody. Then maybe monthly I expect some payment. So the Sukuk holders receive income from the lease payment. And at the end of the lease term, the assets may be transferred back to the issuer or the Sukuk holders, depending on the agreement. So here, basically, it's an element of leasing, an element of renting an item and getting something on an agreed period of time. What is the importance of this Sukuk al-Ijara? So there is asset utilization. Sukuk al-Ijara allows for the optimal use of physical assets while providing financing without the prohibition of interest. So what they are talking here about here, when you get what? The optimal use of physical assets. If I decide to rent a house for you, so you have the right to use the house, right? If I decide to lease or give you my car for a period of time. So optimal use means you can use the house. Cash flow generation. This type of Sukuk provides a predictable stream of income. Like every month, maybe it's $500, you're getting $600, and it also complies with Sharia. An example, a local government issues Sukuk al-Ijara to raise funds for purchasing a fleet of buses. The buses are leased to a public transport company, and the rental income generated from the lease is distributed to Sukuk holders as return on their investment. So this one here, they're telling us we have a government, a local government. It issues a Sukuk al-Ijara to raise funds for purchasing some buses. So what happens is that these buses are leased, they are given to a public company. And the rental income generated from the lease, the money that is coming from the buses is distributed to the Sukuk holders as returns for their investment. So you buy the Sukuk from the government, right? The government go and invest it in some buses, buy some buses, and these buses, the government rents these buses to a company like Sahal or anything. ثم بعد ذلك, the government does what? The owner, the public transport will be giving the government some money. So from this money, you as Sukuk holders, you'll be getting some share. Sukuk al-Mudaraba. So Sukuk al-Mudaraba are based on profit sharing agreements, wherein one party, the investor or financier, provides a capital, while the other party, the entrepreneur, offers expertise and management to carry out the business. So it is just having the concept of the Mudaraba, the ones we saw in our last call. So profits generated from the business are distributed between the two parties according to a pre-agreed ratio, while any losses are borne solely by the investor. So in a Mudaraba, we said in our last call, we have two people. One of them is an investor with the money, Rabbul Mal, and the other one is a Mudarib with an expertise. The Rabbul Mal will give the what? The Rabbul Mal will give the money, capital, to the Mudarib who has expertise and competencies. The Mudarib will go and invest, and then if there is profit, they will share it. And if there is loss, the Rabbul Mal will lose the money and the Mudarib will lose the time he invested in the project. Sukuk al-Musharaka are structured around joint venture partnership, where multiple parties contribute capital to a project or business's venture. Each partner, including Sukuk holders, shares in both profit and losses according to their proportionate share in the investment. So it is just like what we explained in our last course. Then Sukuk Assalam. In our last lesson, we did not explain this Assalam. So Sukuk Assalam are Islamic financial instruments based on forward contracts for goods that are to be delivered in the future. So they are known as forward contracts. Like we are in a contract, we sign a contract that you will supply me some goods in future. So in this type of sukuk, the issuer sells goods to investors with a promise of delivery at a specified future date, and investors pay upfront for this good. So it is basically like I'm paying now, I'm paying the money now, but the goods, I will get it in future. And it normally happens in agriculture. For example, I'm farming some maize. So somebody will just come and do what? And make some payment for 100 bags of maize, pays the money, and I will deliver the maize once they are ready. That is the Assalam. So in this type of sukuk, the issuer sells goods to investors with a promise of delivery at a specified future date, and investors pay upfront for this good. So it is also, there is a word in business, it's called what? I've forgotten the word. So the profit arises when the investors sell the goods at market prices upon delivery. So when I deliver the goods to the investor, he will sell it at a market price by then. And who knows? Maybe there'll be some element of what? Some element of profit. So these are the four types of sukuk. Now, the issuance process of sukuk. So we have this, these are the 6 processes of issuance of sukuk. Number 1, the sukuk is structured based on the type of underlying asset and the purpose of financing. So number 1, it is basically on the, it depends with the type of sukuk. Is it ijara? Is it mudaraba ila ghairi dhalik? Number 2, a committee decides to issue sukuk al-ijara for buying equipment. Then there is the approval. The sukuk structure must obtain approval. There is a Sharia board. Then marketing, the sukuk is then marketed. We need to market the sukuk. Then subscription, investors are called to buy the sukuk. Issuance, once subscribed, the sukuk is issued. Then lastly, there is the payment and redemption. Okay, so that is the end of our lesson. We only have 3 minutes remaining. Is there any question as I take the attendance? Naam. Is there a question?
Thank you, teacher. Thank you, teacher. No question, inshallah.
Okay, thank you. We'll meet in our next lesson, inshallah.
Inshallah. شكرا.
Okay, Assalam.